Hi, everybody. Welcome to another Toolkit Tuesday. I'm Dave Etkin. I'm the director here at the Louisville Small Business Development Center. We are part of a network, Kentucky-wide and nationwide, of there's 12 centers just like ours here in the state of Kentucky. And if you are looking for free resources to start or grow your business, find funding, or even buy a business, which is what we're going to talk about today, you came to the right place, as we can certainly help you out with some resources. As always, I'm joined with my good friend and coworker, Janet Flaw. How are you, Janet?
Good afternoon, Dave.
Janet will be helping us out with the tech issues, and by God, we got some today. So just to
Already.
make sure there's some, you guys can see and hear us out there. If you wouldn't mind just, look at the bottom of your toolbar, and if you don't see it, just take your cursor down to the bottom there and hover around. It should pop right up. There you'll find the little chat button. Just click on that, and then just type in and tell me hello, and that you can see and hear me, and where you're joining from. I just do that because I like to know where everybody's coming from. So it's always fun to see how far away people come to get on these Toolkit Tuesdays, which I certainly appreciate it. So we got Troy. Troy, how are you? Wonder where you're from. David Bowman. Hey, David. There's Tom. Lexington, Kentucky. Hey, Tom. Dan, Spring Hill, Tennessee. Thanks for joining us. I appreciate you coming in. Lindsay, Scott County, Kentucky. Excellent. Michael from Lexington. Troy, you are in Shelbyville. Great. Thanks for joining us. Let me know about that. Appreciate it. Well, Paul from Las Vegas. Wow. Hey, Will. Fort Knox, I guess, or Knox County? Good question. Yeah. Okay. Thanks, everybody, for sharing. And I guess everything's working okay. I'll tell you what, buying a business is a great opportunity to get into entrepreneurship without starting. If you're kind of like me and have a little trouble coming up with these cool ideas, buying a business might be a way for you to get into entrepreneurship, in a good way. Or if you have an existing business, adding another business onto your existing business is a good way to grow sort of inorganically. But there is an opportunity. You've probably heard of the silver tsunami, where small businesses are owned primarily, by and large, of an aging population, and those folks will be wanting to maybe cash out for retirement purposes. So there might be, a lot of opportunity out there for you, but finding a business to buy is a tricky sometimes. So we brought in one of the top experts that we know in the field of buying businesses and business brokerages. This is Phil Ellison. Phil, are you out there?
Yes, I'm here.
There you are. Phil, I'm going to let you introduce yourself a little bit more, but you are a fantastic resource. You've come on and helped us quite a bit, and I always appreciate your knowledge. And thanks again for sharing with us. So why don't you just dive right in, and let's get started. And if you have any questions or comments, put them in the chat there. This is a great opportunity for you to engage directly with an expert in the field. So don't hesitate. There's no wrong answers, only the ones you don't ask. So put them in the chat there, and we'll get Phil to answer those questions for you. So Phil, let's just go ahead and dive in. I'll let you turn the keys to the car over to you, and let's go.
Can you see everything okay before I get started?
Looks great. Let's do it.
Good. Well, thanks, Dave, and thanks, Janet, for inviting me here today. Did this maybe a year ago, I don't remember, but enjoyed helping out and contributing in any way that I can for this group. I'm sure everyone on here knows the SBDC is a great resource for small business owners, and in this case, anyone that maybe wants to buy a business or grow their business through acquisition. So, the subject of buying a business is one that we could talk about for you could do a whole semester on it. Some people do now. It's part of the ETA movement, but I think that I'm hoping to pass along some valuable information today in your hopes of buying an existing business. I think that I've got some guidance and structures to the processes, as well as maybe answer some questions in the time that we have today that'll help everyone. So, before we get started, I'll kind of tell you a little bit about my background. And I'm just like you. I was looking to buy a business at one time, and I've acquired two existing businesses myself, and for years often searched for opportunities. And the truth is, I wasted a lot of time and made several mistakes. A lot of that is what's contributed to my success now as a business broker. You learn from your mistakes and you get better, and then eventually you figure out how to advise people on the topic. But it's allowed me to gain a deep knowledge of the whole process of buying and selling, and it's led me into this career that I love a lot. So a little more about myself and about Murphy Business Sales, which is the group that I'm part of. Murphy Business Sales is the largest brokerage and lower middle market firm in North America. I actually have three different franchises. We're a franchise group, Louisville, Cincinnati, and Nashville. And then I recently took on a new role as a director of corporate brokerage services. So that is a somewhat fractional, but I have 53 franchisees that I assist on really anything that's transactional in terms of deals, and helping to answer their questions and guide them along. But I'm from Kentucky, went to Western Kentucky. My career in the steel business took me to the Chicago area, where I ended up getting my MBA at DePaul University. That time in the steel industry, I learned a lot working for a smaller company, and really just kind of got the entrepreneurial bug and started my own steel company. And then eventually, like I said before, I acquired, and the most recent one was Albert Oil Company. Albert Oil Company was a business that was owned by a family friend, and uh, didn't have an exit plan. And so kind of fell into that opportunity, had a business partner. We bought that business. We grew it, added an environmental arm to the company, really had a lot of success scaling it over just a few years, and sold to a strategic buyer, and then, jumped right into this world. So that's just a little bit about me, and what we're really here for is, the process of buying a business. So this is a condensed version of the acquisition process. I have a 24-step flow chart that, we don't really have time to cover today, but you can really get into the details this as much as you want. But the very first part here, I mean, we're just trying to find a business. So what do we need to do if we're going to find the business to buy? So, I think the first thing to really think about is, what can you afford? According to the SBA, you only need 10% down payment. Some lenders want to see more than that. But I think you can start in terms of, what do you have available to put down? And available to put down isn't necessarily how much you have, and I'll talk about that in a second. But if it's 10% and you have $100,000, well, then you're probably looking at a business that, at the max would be $1 million in value. Most of these businesses, this is all SBA related deals is what I'm talking about today. So think Main Street deals, maybe the very lower end of the lower middle market, but businesses that are operated by a single owner, or maybe two. But they sell at 2 to 3 times seller discretionary earnings, which I'll get into the definition of that on average. So in the lower end, you're going to be closer to the 2 times, and you start getting to the high end, it's 3. And I mean, sometimes it's more than that if it's a larger business. But one thing to keep in mind that's really important is, you have to have some liquidity beyond the cash, beyond what you have available for a down payment. So we advise 1.5 to 1.6 times that amount. So if you have $100,000, you probably need to have more like $150,000 to $160,000. And I think the point is, the bank wants to see that you have this additional liquidity available to live off of, and maybe cover some expenses if an issue arises. Next step, I would say, develop a criteria. Now, some of these kind of have an effect on each other. So, and industry, what industry do you have experience in? Experience is a big factor in SBA lending. They need to see that your skills and your experience, relate to this business that you're looking to acquire. So think about that and then what interests you may have, and can you apply whatever skills you have or experience you have to another industry, and really think through how to create that story so that when you do get in front of a bank, you can clearly explain why these skills transfer. What is your geographical limitations? Where do you want this business to be? So like if you're in Louisville, Kentucky, and you say, I want to be within 1 hour radius of Louisville, well, that actually may have an effect on the type of industry you look for. Because if you have a very narrow industry search and you just are in a small area as well, and I'm not saying an hour radius Louisville is small, but it does limit versus what, for example, a nationwide search would allow you to look for. So think about where you want to be, and then the size of the business, and that can kind of go back to that affordability calculation. So now that you kind of have an idea, where do you go to find that business? Well, there's several business for sale websites out there. Biz by Sell is the one that's mostly known by people. There's others, BizQuest, businessbroker.net. You can go to business brokers' individual websites. If you go to my website, you can search, my businesses that I have for sale, and you can search like all within the Murphy network. So if you had a nationwide search, you could say, hey, I like the way Murphy represents people. Let's look and see what they have available. But also reaching out to business brokers is worth time and effort, because sometimes we have deals that aren't necessarily on the market. So there could be opportunities there. Commercial bankers, they talk to business owners all the time. If you have some commercial bankers, it's probably worth reaching out and saying, hey, I'm looking for some opportunities. And then that way, if it crosses their desk, maybe it comes your way. So, all of that's part of networking. I think just networking with people, if you're looking to buy a business and letting people know that this is your intent, this is something you want to do. It's surprising how fast word spreads. I mean, that's actually how I started my business that I do now, looking for opportunities to sell. I just networked like crazy, and that's how I found deals. And I think, I'm not trying to cut myself out of the picture here, but, in some cases, when you talk to people, you may find that opportunity. Indirect outreach. If you know a business owner that you maybe have a personal relationship with or a connection with, through another person, you could always reach out to them and just say, hey, I'm interested in potentially buying a business one day, and just curious what your exit plan looks like. So that's another option. The discovery process. So, is the business criteria met? What's your budget, desired income that you're going to get from this business, and your skill set, what we talked about. So in terms of the desired income, one thing that you need to be sure you do, and we may talk about this a little bit down the road, is figure out what the debt service looks like. Because if a business is cash flowing $500,000 a year, depending on what you pay for it, that $500,000 has to go pay for the debt service. You're going to have to pay some taxes out of that cash, and then what's left for you. So there is a bit of a calculation there that you have to do. When you find that business, you're going to submit an inquiry. Many times, if you're going through a broker, or you're going through some of these websites, or you're contacting a target directly. What's going to happen next is you're probably going to be asked to sign a non-disclosure agreement that protects all parties, because you're going to be looking at sensitive information, what you have to look at whenever reviewing a business. And then once that non-disclosure agreement's signed, and if a broker's involved, they're probably going to want to have a conversation with you to qualify you as a buyer. At that point, you should have the opportunity to review the SIM, which we call a confidential information memorandum, or some people call it the offering memorandum. That should have all the details about the business, a spread of financials, at least 3 years, sometimes 5 years, details about, the org chart, whatever it may be, that's going to have that's where you're going to find most of your information. And then you're going to want to have a Q&A with the owner directly. And typically that involves the broker who will organize that. It could be a phone call, it could be a Zoom meeting, it could be an in-person meeting where you meet at the place of business. Now, those usually take place after hours because most cases a business owner doesn't want people to know that the business is for sale. So, oh, sorry, I jumped ahead. The buyer seller meeting is where you're going to meet them in person, and that's typically, an after hours, as I said. So now the question is, what should I look for in a business? Well, earning stability is a key factor to consider. If earnings fluctuate dramatically, it becomes a little challenging to figure out and understand, with confidence, what is this business going to do next year and the year beyond? And that affects valuation tremendously. So watch for earnings stability. If a company year in, year out does pretty much the same level of earnings, you can feel pretty good that it's going to continue. Recurring revenue, I mean, that is a hot item, obviously. Recurring revenue exists. It's going to make the business more appealing. Because that would be like the Planet Fitnesses of the world. I'm sure there's many of us out there that are paying them $10 a month or $20 a month, and we have for years and don't even think about it. Well, they're on a recurring revenue model, and it makes their business very valuable. Gross profit percentage. So, this is where you might want to do some research and find what industries typical gross profit percentage looks like, and then compare your target company to that industry average, and it gives you an idea of where they stand in comparison. So, but this is an important number because it tells you how much money you have to work with for operating expenses. And the reputation and the image of the company are important, whether that's, Google reviews or just word of mouth. It's tough to jump in and take over a company that maybe doesn't have the best reviews. It's definitely possible to improve that image and reputation. It's going to take some effort. So in that case, I mean, maybe you find, a deal that's a little bit lower than what typical market would be because of that. But it's going to take some additional effort. Customer loyalty and competition. I mean, I think that's pretty obvious. You're going to want to take a look at that. Competition in the market, you definitely want to look at it. Who else is out there doing what we're doing? Is there an area to grow? I mean, you could be the best in the market. You could be, somewhere in the middle. I think it's something to consider whenever you're looking at these deals. Customer diversity or customer concentration. Now, this one's big. A lot of people look at businesses and the biggest customer might be worth or might be 50% of the revenue. I mean, if that's the case, that is a very risky business, and you have to think about that. And so you may build out a structure when you're acquiring the business that takes that into consideration. And I would say if it's a small business and it's 15-20%, like you might be able to get around that. But if you start getting into that, a third of the business, half the business, or two customers, or 2/3 of the business, that's a little risky, and you want to maybe take some caution there. Employee retention or management depth. Is there a management team, or is it owner operator? Historical and projected growth. I mean, can you really see some growth opportunities in this business? It's something you should analyze and think about. And then market size. So what is the potential in the market? Key locations, that's the other one. So this chart is from the IBBA, which is the International Business Brokers Association. This is, I think, a new one just came out last week, and I didn't quite have a chance to update it, but it still gives you a good idea of what the multiples are by deal size. So as I referenced earlier, the smaller the deals, you're going to be small, you're going to be down in that two times range. And as you can see, like, that is consistent. And that is for deals that are 500,000 or below. And then as you get larger, they grow. And these are more this top end of the bar here. These are the $5 to $50 million, really getting into lower middle market, non-SBA lending type deals. And as you can see, it really jumps. But hey, if you're buying a business and you see opportunities for growth, well, here's how you get a great return on your on your business. You grow it, and the multiple grows with it. So I mentioned seller discretionary earnings earlier. It's a number, or it's a definition that you need to know. You see that number pretty much in every deal, unless you start getting into, say 750 and above. People might reference EBITDA, but this is the earnings of a business prior to income taxes, depreciation, amortization, interest, non-operating income and expenses, non-recurring income and expenses, one owner's entire compensation. So don't, if some people want to add in all owners, no, the definition includes only one owner's compensation, including benefits and any non-business or personal expenses paid by the business. This is a tricky area. I mean, some banks don't allow some of these add backs, and you really need to look at these items and say to yourself, is this going to be an expense in the business that continues whenever I own it? So you'll also see it, some of these SDA build outs, they'll have these line items referred to as add backs. Well, that's the expense that's considered discretionary. So that's the add back column. You should have a separate, column for those add backs, and they might put things in there like cell phones, owner's health insurance. And that's what I mentioned earlier, are things you need to really think about and consider. If you're going to have a cell phone, which you probably are, and the business is probably going to pay for it, when you're doing your own analysis of that business, you may not want to add it back. I mean, they may want to add it back because they get a multiple of 2 to 3 times that number, but you may not want to do that. And I wouldn't recommend doing it because it's going to be an expense moving forward. And kind of jumped ahead a little bit there, but you want to ask your lender what add backs they're going to allow. You should have those conversations with them, and just be cautious when you see all kinds of crazy expenses added back. The more expenses that get added back, I think it adds more risk to the deal. All right, so the next few slides, the intention is to help you know what to look for on the financial evaluation process. Some of this may be done prior to due diligence, but the in-depth analysis will happen during the due diligence process. So you're going to analyze 3-year growth rate, customer concentration, which I mentioned earlier, repeating versus new customers. You're just looking at, also looking at untapped sales and marketing opportunities in the business. But really, I think another important thing is to analyze and dive into the margins of the business. What's the pricing trend? Right now with some of the tariff issues, there is some uncertainty on what's going to happen. It may create some difficulties in doing some of this analysis, or require some, speculation, so to speak. And I think we are seeing a little bit of a slowdown in the amount of opportunities coming to market, in part because of that. So that creates a challenge. And then calculate the current SDE. So the average annual profits. I suggest doing a weighted average. So the way I do it is you take the most recent year of SDE times 3, you do the next most recent times 2, and the third times 1, add those up, divide it by 6. That's a weighted average that gives more credibility to the most recent results. Now you're going to have an average, and then you're going to add back those non-cash expenses, the depreciation, amortization, plus the interest, and then those owners' personal benefits. So just, add back the ones that you see fit, and if it's not applicable, if you're going to continue to have those expenses in the business, don't add it back. So owner benefit is also a term that some people kind of really, it's the same as SDE. So now when you're in this evaluation phase, you're going to project your baseline owner benefit. So what is that current SDE? Now, plus or minus sales adjustments, and then subtract out that debt service, and then any expected changes to the expense structure. If you think you need to add an estimator to the business, and that's, a $40,000 expense, well, make sure you account for that. And then what's left at the bottom is going to be your projected pre-tax cash for the new ownership group. And that is what you should really use to figure out what you're going to offer on a business. So, working capital is a big thing. I mean, you've got a lot of money tied up in that business. Whether it's, inventory, I mean, that's usually the biggest one. You've got accounts receivable. I mean, if you have 30-day terms versus 90-day terms, that's going to significantly impact the amount of working capital that your business needs to have. Now, when you're working with a lender, they're going to typically on the SBA deal, they're going to finance you a working line of credit for your business. But you definitely want to make sure that there's enough and do the right analysis. And that's something where you may want to bring in your CPA to help you with that. But you want to figure out what amount of working capital you're going to need on an ongoing business basis for this business. All right, so at this point in the process, you reviewed financials, you've had the Q&A with the owner and the broker, and the next step is to submit a letter of intent. So letter of intent is a non-binding agreement, gives you the opportunity to perform your due diligence and negotiate exclusively in most cases with the seller. So once you've finalized due diligence, which is a long and lengthy process of its own, and I definitely advise you, we'll talk a little bit about that, to get a CPA or professional involved in that. From due diligence, you will then, based on those results, you'll negotiate a purchase agreement. Hopefully it's in line with the letter of intent. Hopefully what you reviewed is what you expected, and you found out, some positive outcomes from due diligence. If you didn't find out a positive outcome, if you found out there were some issues, you may submit a purchase agreement that is somewhat altered from that initial letter of intent. And that's, that can be a touchy subject, but if your findings didn't pan out, then that's what you're going to need to do. And then closing is the final step. In that process where the letter of intent starts and you're performing due diligence, contract negotiation, finalizing that contract, I do recommend that you bring in an attorney. That's something that, us as brokers, we sometimes have standardized documents, but I think it's typically in your best interest to have a legal professional that does have experience in mergers and acquisitions as part of your team. You'll need some advice on what structure of an entity to set up and beyond. So definitely, if you're looking to buy a business, start looking for that attorney that you can turn to when the timing comes. So they can also advise on the form of purchase, and stock or asset purchase are the two different types. Now, I will tell you that in most cases, an asset purchase is what we see. It protects you from liability. Stock purchase, you inherit that business as is, and all of its really unknown liabilities and risks that come along with it. So, if something was going on in that business and the owner was unaware and you were unaware and it comes up later, it's the same tax ID, the same business. So you are subject to some potential issues and exposure. Asset purchase gives you the added benefit of having a depreciation, being able to depreciate the assets that you've acquired in that purchase. But there's some other forms of purchase that you could get into. They're pretty advanced, and definitely something that you would want to get some legal counsel on. So debt structure is something else. I mean, we have a lot of people when they're structuring these deals, they want all seller financing, and the reality is that's just not what we typically see. This slide gives you an idea of how much cash at closing you typically see on these deals versus seller financing. And you could see, it's pretty consistent over time. I mean, I would say most of the deals I see, when they occur, it's like 10% seller financing. But, it's primarily cash at close and with some small seller note. That's the structure that we most commonly see in these deals. So, that's 10% equity injection by you as the buyer with maybe a 10% seller note. And the remaining is the SBA loan. So the due diligence, I mean, this is where you are verifying that the information you've received is accurate. I would consider engaging with some type of advisor. There are folks out there who will do this. I would not recommend just handing it over and not having involvement. I think if you are buying a business and you are investing your capital and your time into doing this, that you need to know the numbers, then you need to know the business as well as possible. So CPA can really help you with the nuts and bolts of the numbers, but don't just pass it off. Definitely get professionals engaged where you see fit. And here's just some examples of items you would see on a due diligence checklist. One that I think some people don't think of, AR aging report. That gives you some insight into how quickly they're able to collect their money. The physical assets, you should inspect those. I would make sure that if there's trucks, if there's tools, if there's equipment, that you take a look at that and see what condition it is in. Because if you need to replace that in the next year or two, you need to include that in your cash flow projections for the business and account for that. Another one that I think gets looked over but is really important, if you're buying a business and there is real estate that's involved, there's going to be a phase 1 survey, potentially a phase 2. You as the buyer pay for that. It gets folded into the SBA note, but if it's a business like, say, an auto repair, and you know that they've been handling oil there for years and years and maybe decades, it's hard to know how that was handled in years past. They may have a great plan in place and process in place for handling those fluids now, but did they 50 years ago if they've been in business for that long? So just be cautious there and understand that you will be paying for those surveys when they're due. And really the final steps, kind of, you're really getting to that phase now if you've gotten through the due diligence where you are finalizing and signing that purchase agreement. There is, if you get a term sheet from the lender, that's one step. You get the underwriting approval from the lender, that's another step. And then you're going to get that complete lender checklist, and you're going to have several contingencies that you're going to have to meet before you can actually get that closing. Just for example, you're going to have life insurance, or if you have existing life insurance, it's going to have to be, assigned. So there's just several things in that process you're going to have to do and complete. And then preparing for closing, a lot of times people don't think about that transition and what they have to do. You've got to get bank accounts in place. You've got to have the insurance. You need to have a payroll provider. This is another one, the credit cards. If you are going to be taking credit cards, there is a process to getting to accepting credit cards, and it's an approval process that takes place, and it can take some time. So definitely get a bit of a head start on that if you can. And then with the owner of the business, the seller of the business, have a meeting, sit down and try to plan that transition and talk about what that conversation is going to be like with the employees, and really plan that out together and try to come up with a plan that works best, for the employees, I think, because they are going to be the most nervous about this sale. It never fails, they're always going to initially think about, how does this affect me? And, does it affect my paycheck? And so I think the best course of action is when you're buying something, when you're buying a business, I wouldn't go in and change anything dramatically day one. And I don't know that I would even do that month 3 or 4. I think you got to give it a good 6 years or 6 months to 1 year to, you know, just review and see what's going on, and then start making your changes at that time as you see fit. Um, Inventory count before you close, you're going to want to make sure that the inventory is what it's supposed to be based on your purchase agreement. And then the closing, I mean, most of the time it's, you're using the attorneys, or it may be at a title company if there's real estate involved. So there's always going to be challenges along the way. I think that um, there's many steps while you're buying the business during that process, where you initially sign that NDA to closing, where you're probably going to wonder if this is going to happen. There may be bumps in the road, and there probably will be delays along the way and that are out of your control. But I would just say, lean on your advisors, if it's an attorney, if it's a CPA, or that broker that you're working with. Stay in touch with all these people. Don't let things kind of drift out. The more engaged you are in the process, I think you'll have a better outcome. My saying is that time kills deals. So I always, you don't want to rush things, but you don't want them to drag out, because you just don't control, you can't control what's going to happen in many cases, and that time can be a real bugaboo. So I guess the next thing to say would be congratulations if you get that deal closed. You're going to be a business owner, and it is a lot of work. So I'm sure you know that if you're going into this process. No one said that small business ownership is luxurious in any way. It's a lot of work. There's a lot of reward that goes with it. But don't forget that there's a lot of people that you can build out in your team that can support you along the way. And that's it. So I think, I know I probably went a little fast, just because I wanted to allow some time for questions. But here's some information. It's got my website on it, and Biz Buy Sell. And then, there's some books that are out there that I think would be valuable. I would say probably the hottest one, I don't know, the ETA movement, entrepreneurship through acquisition. It was introduced by Walker Dybel. His book is Buy Then Build. There's a lot, there's a lot of information out there around the ETA world. And so and I mean, that's a good thing. There's a lot of resources out there right now. So that's it. I think, Dave, Janet, we can open this up to questions if there
All
are
right.
some.
There are a ton of questions, Phil.
Good.
Of course there would be. So, um, let's see. How do you get around here's just let's dive right into the technical stuff.
Yeah.
How do you get around the 10% or more of cash on hand for bank requirement? Are SBA business loans requiring this amount?
Yes. And there were some changes recently in the SBA that are making it more difficult to get around that. There used to be, so the rule was if you put down 5%, the business owner agreed to do an additional 5% seller note, that they would count that towards your equity. But now the way the rule changed, and don't go to an SBA lender to get the specifics, but the way I understand it, they changed that rule to where now that seller note has to be on full standby for the full 10-year term of the loan, meaning
Right.
they can't take any payment for 10 years.
Yeah.
And I don't know a single owner that would be willing to do that. So
Yeah, totally agree. So follow on a little bit different. What are the skills attractive to a bank loan or SBA loan? Are those the same skills for running a business?
I think, yeah, I think so. I mean, I think if you have, I hope I'm going down the right path with this answer.
Mhm.
I think if you have management experience and you're buying a business where you're going to have employees, they're going to want to see that management experience and know that you can manage a team. If you're going from one industry to another where there's really no connection there, that could be an issue. So I'm trying to think of a good example, but let's just say that you work in a service industry, or let's say you're a mortgage broker and you want to buy a trucking company. I think it could be hard to connect the two skill sets.
Mhm.
So I think that's something you got to consider is, what crossover is there from one industry to another, or how do my skill sets match up with a particular industry?
Yeah. What other ways would you, a buyer mitigate that skill mismatch? I mean,
That's a good question. Yeah. I mean, you know, I think that's a good question. I think that well, give me an example. Can you give me an example where you think that might be applicable, and I can maybe speak to that?
I don't know. I'm just speaking from my experience. I mean,
Yeah.
I've been so random about, and I guess lucky about buying businesses I had no experience in, and
Yeah.
somehow
Yeah.
managed to survive. But
Yeah. I think that if you're a strong candidate in many other areas, so let's say that you have a lot of equity to put into the deal, there's workarounds.
mhm,
So I think you can get around the skill set if you're a very strong buyer, but you have to be able to still convince that bank that you can do it.
right.
And you may be able to, um, but it just depends. I mean, if you're trying to buy a engineering firm and you're not an engineer, I think it's going to be
Yeah. Yeah.
hard sell.
Totally agree. One more from this same person. Phil, can you buy a business with zero cash on hand? Or does my FICO score matter? Is owner financing uh, an option?
Um, if you can find a seller that's willing to do that, um, you may be able to arrange a seller finance deal. But
Mhm.
I think if there's a bank loan involved, if it's an SBA loan, I can't see any way that you'd be able to get a deal done with zero cash.
Yeah. Here's a couple questions from my good friend Larry Horn. How are you,
Oh
Larry?
yeah.
What SBA changes have happened or do you anticipate to happen in the next 12 months? That's a fantastic question.
Yeah, well, I don't know what's going to happen in the next 12 months for sure,
Does
'cause
anybody? Yeah.
there were a lot of changes that just came out. And maybe I can send you all a summary because we actually just went through this. We had a presentation and there were a ton of changes, so many so that it's kind of hard to even, recall. But the one big one was that was the standby note with
Mhm.
sellers.
Yeah.
Um, the other one, there was another one that was pretty significant that had to do with, and this really applied to a lot of our brokers in Florida and like more coastal regions where it had to be 100% US ownership now.
Hmm.
SBA for the SBA to be able to finance a deal. Another one that's kind of along those same lines was, um, if you had operations in another country, you weren't eligible for SBA. So I don't know what they have done though of late and the trend. So if I had to predict into the future, what they've done is they've reverted more to older rules. So they changed a bunch of rules, I think 2 years ago to make it a little easier to borrow, and they've reversed nearly all of those. Another big one was fees. So you probably know they waived a lot of the guarantee fees on the
All
loan.
right.
Well, that went away. They put those back in place. There was a $300 million deficit in 2024 um, because of those fees being waived. So I mean, they kind of had to. So yeah, I wish I had a better answer for you, Larry, but My predicting game is not the best.
Nor is anybody else's. But Larry also wants to know, and we spoke about this, but just let's do it again. Can you combine SBA loan and owner financing?
Yeah. Yeah. If you can negotiate a deal and the owner's willing to finance 30% or 40%, and SBA is going to love that deal, I think.
Hmm.
Take some risk off their plate. Their
Right.
exposure is a little bit less. So
Yeah. But they the owner financing piece doesn't isn't the standby credit pertain to that as well?
So on that, it is going to be, there's no hard and fast rule. In some cases, you can balloon out those payments. Where it's full standby is when it is used as equity
Okay.
for the buyer. So if it's not used as equity for the buyer, and there is a, 10, 20% seller note, whatever the number is, um, the bank, it's up to the bank, but they could allow you to potentially balloon that out after a certain amount of time
Hmm.
to where the seller could get paid in, say, 3 years, 5 years, whatever they agree to,
Yeah.
even if the term is 10 years.
Yeah.
And it's going to depend on how, what does the deal look like and how does it cash flow? They may want it amortized over 10 years with that 3 year, 5 year balloon. Um, but if the cash flow is good, if you got a good deal and it still cash flows amortized over a shorter period, maybe they'll allow that. There was a rule at one time where, the bank couldn't get paid before, or the seller couldn't get paid before the bank got paid, and that
Mhm.
seems to have loosened. Now, if you're predicting the future, maybe that'll change. It hasn't changed that I know of as of yet.
Yeah. Hmm. I sold a business, I don't know, a while back and had a seller's note on that, and it was great. I loved it.
Oh, yeah. I'm
Mailbox money
sure.
was fantastic.
Hmm. Well, the advantage for the seller, and we talked to sellers about this. The advantage for the seller is, there is a tax deferment that takes place when you don't receive all of
Yeah.
your money. So if that is, everyone has their priorities, right? If your priority is tax deferment, maybe that's a good option for you.
Mhm.
Some owners, they're not as worried about the price. They're more worried about their employees and what's it going to look like for them moving forward. So, that is something that, I didn't really mention, but I think it's important if you're going to buy a business, maybe one of those first conversations you have with that seller is, what are you looking for? And, what do you want? What's important to you?
Yeah.
Because if you're in a competitive situation for buying that business, you want to tailor your offer to whatever those impact points are for that seller and give you, if you can give yourself a leg up, then by all means do it.
Yeah. Ken's got a great add-on. How does the seller earnout provision work towards a deal?
You Seller earnouts are not allowed by SBA, by the SBA, but um I would say a workaround would be maybe what I would call a contingent seller note,
Hmm.
where you can structure it to where, the seller note gets paid if certain criteria are met. So it looks a lot like an earnout, but um, whether it's earnings or revenue, you see that in some cases where there is not stable earnings. And so, like, for instance, let's say in 2024, company had, a significant growth from previous years, and the multiples kind of, weighted towards that performance of 2024, which was really good. Well, it might skew that valuation um, out in a way that it doesn't necessarily cash flow and look if you looked at 22 or 23. So the workaround would be, well, you've got to work out the deal structure based on whatever, cash flows in 2022 or 2023. But if we continue down this path, you can get X amount of dollars as long as you hit those earnings marks. So there's ways to do it. Talk to your lender. If you have a lender, they can talk you through that.
Hmm. Awesome. Thank you. Lindsay says, I have struggled to find opportunities on the traditional biz buy sell. You mentioned networking. What do you think the most important things to do to find those off the market options when you are new to an area with a minimal network?
Oh, that's a good question. Yeah.
Mhm.
Yeah, I mean, some of it's just putting yourself out there. So, whether it's going to like a chamber event, you know, um, find these different um, opportunities. I mean, there are different business groups out there. Find a way to get involved in those groups and just start introducing yourself and making connection with folks in that group. I mean, that's a lot like I mentioned, I started my business. I just started, visiting BNI groups and, you know, going to some Rotary events. Someone that was in the Rotary invited me going to chamber events, and I just met more and more people and made those connections. And, Larry Horn's on here. He knows everyone. Just get a meeting
He
with Larry
does.
Horn. He'll connect you to everyone. But I think whenever you're meeting with someone, you get a meeting like, is there anyone else you can connect me with? You tell them the type of people you want to meet. I would like to meet more people who can introduce me to business owners, whatever it
Yeah.
may be.
Yeah, Larry just, if you look in the chat, he just said, come to the Venture Connectors. And that's a great resource too. And that's,
I totally agree.
yeah, Venture Connectors. Just to Google that. I think it's coming up here in a week or so. So that's a good resource too to get involved in.
Yeah.
Also, Lindsay says, even with 20% down, I have run into several brokers and commercial bankers who are dismissive because we aren't our larger scale deal. Do you have any recommendations on certain people or organizations to work with that are small transaction friendly, 1 million or less?
Yeah, that's tough. I mean, you're always gonna, I think you're just always gonna run into people like that. It's
Hmm.
unfortunate. You know, I feel pretty strongly about our firm at Murphy Business Sales. I mean, we have 240 brokers around the country. You know, there was a time where I was looking for a business. So, I mean, I know what it's like to do that search. In terms of how to find those people that aren't going to be dismissive, I think it's kind of a numbers game. It's tough. But I think you get a sense pretty quickly when you speak to someone how they're going to treat you. And, I think that although it might look like you are missing out on deal flow, think about the fact that if someone is treating people like that, they probably have a hard time getting a deal closed.
Hmm.
So you really may not be you may be potentially tying yourself into a transaction that is going to be a lot more work than you hope for. But yeah, and I would ask recommendations. If you're out networking with people, I mean, ask people who they suggest you work with. And I find referrals to be the best,
Yeah.
way to find good people.
Yeah. What if you're a first-time business buyer? What is the best business to buy as a foot in, to gain experience, do you think?
I don't know that there's a best one. I think you just, you find the business that you have a real interest in and that you
Hmm.
can see yourself in first, and then look for opportunities for growth. And I think that's a way that you can kind of create some success for yourself to launch
Hmm.
to that business into, uh, greater realm, more productivity. But yeah, I think if you don't have an interest in it and you can't see yourself in it, you're kind of, I think, setting yourself up. Um,
Yeah.
I think making sure the owner is someone you feel like you can work with, because even if they are leaving the company, they people are probably still going to call them. They
Yeah.
might still be in the market. So make sure it's somebody that you think you can work with and it's trustworthy.
Phil, do you recommend like getting an attorney, engaging with one prior to even starting the process so that you have somebody on board and ready to go and kind of get down the road a little bit before you do a deal?
Yeah, I think it's a good idea to kind of have a team in mind. I think, yeah, so I mean, I think you reach out to people, attorneys, CPAs, bankers, whoever it may be, and ask them, um, tell them like, hey, I'm looking for my team. I'm in the process of trying to buy a business, and I'm, interviewing attorneys, CPAs, whoever it may be, to be a part of that team. I don't think it can hurt because what happens now, they know that you're looking for someone to represent you, and then, sometimes that opportunity comes up and you need to act quickly. So
Mhm.
if you don't have someone on your team, so to speak, then it is kind of hard to maybe react as quickly.
Um, this is a little off topic, a little left turn here, but
Mm.
flip this around. I mean, what what would you tell somebody if they were interested in selling their business?
Yeah, I think, selling your business, like the most important thing to me is, good books and records. Do they have that taken care of? When I'm talking to people, I want to know, what is your timeline? If you need to sell right now, that might be a challenge. I really need to see, well, ideally I can see someone, who's going to sell in 3 to 5 years, and we can kind of do some planning and figure out what their goals are. Um, but I think, the big thing is a business is more valuable the less involved the owner is.
Hmm.
Not saying absentee, I don't mean that. I mean, although that is very appealing, but why would you sell if you have a cash flowing absentee business? Um, but what I mean is like those day-to-day tasks, do you have a team of people that do that for you so that, if you're gone, the question is, if you're gone for a month, what happens to the business?
Right.
So, but we have kind of a set of what I would call value drivers that when we're working with business owners, we sit down and we talk about. So part of our process is just kind of understanding what their goals are and what their needs are on the front end. Okay. And then we ask for financial information and some other business information, and we'll do that kind of baseline indication of value. And from there, we'll have a conversation about maybe where they could improve. So we might look at KPIs. Hey, what does this ratio look like for your company versus the industry? And maybe this is something you can improve on. What does your organizational structure look like? And we go through the list and we start working with them. And, you know, we tell them, this is what your business is worth today, and this is what it could be worth. So I might pull a data set, just as an example. Let's say a company's cash flowing $500,000 a year. I might pull a data set if they've said to me, I need to sell it for, X amount that's unattainable today. I've got access to comps, and I'll pull a data set that shows, where they need to be to reach that number. And so
Mhm.
maybe it's $1.5 million. And so I'll show them the actual, the facts, and say, well, if you want this much, this is where you need to get. So, what's the plan? And we don't work with people like day to day, that's really more of a role for a business coach or consultant, something like that. We can give them the high level, this is what you need to work on, but then they may need to engage with someone that's going to get more involved in the day to day of the business.
Yeah. That's what we do here at the SBDC.
Absolutely. I mean,
For free.
and it's free. Yeah. I mean, that's the thing, so.
Yeah. Let's see, one more question here. What is the best way, and I was thinking about this when you were talking about
Mhm.
some risk factors, but what is the best way to negotiate a different sales price than the one listed?
Yeah, I mean, I think that I mean, I'm sure that whoever has it listed is going to say, well, this is what the valuation was. Well, I think that if you've done your work and you come up with a different valuation, and you can show them a set of facts that says, hey, this is the cash flow of the business and this is what it justifies. I'm sorry, but I need this rate of return, and I need, to pay this debt service. And this is the number. I think that is, I mean, it's a tough conversation to have, but if it is your situation and in your case, then I think you can just present the numbers to someone, and a logical person's gonna, someone that respects your position is gonna at least acknowledge it. They may not agree to it, but present them with facts.
Yeah. I've been involved with a couple transactions where there's conversations about discounting for risk, like the customer
Yeah.
concentration risk, you would discount the price because of an unmitigated risk. And I
Yeah.
don't know if that's an approach that you've come across as well.
Oh, absolutely. Yeah. I mean, when we're doing our valuations, we discount for things like that. I
Yeah.
mean, whatever the number may be, it might be a 20% discount, because of customer concentration, whatever it is. But yeah, so I think that, do some research if you're in that situation, and I'm sure there's information you can find out there that says, this is what you should discount for these particular situations, and use it.
Yeah. All right. Phil, this has been great. This has been so much fun, and I learned a ton. I know everybody else did too. So thanks for sharing all that with us. It's been fantastic having you again. We need to have you back way more often than once a year or something, because this
I
is
think I'm
really
coming back in July.
okay, even better.
I can't remember, but Janet set it up. It's set up, and it's going to be about selling your business.
Okay, perfect.
So
Good.
I'm happy to come on as much as you need. So
Yeah. Well, everyone, reach out to Phil. If you're interested in purchasing a business, you want to do it right, and you want to surround yourself with the right experts, and Phil is one of them. So don't hesitate to put him on your team.
yeah, and I'll add, if you're somewhere not in this area and you find I mean, this is a little bit of a pitch, Dave, but if you,
Pitch.
I mean, if there's a Murphy broker in your market, I would say reach out to them. They'll be happy to take your call and talk to you as well.
Yeah. And when you're buying your business and you want an SBA loan, we'll certainly help you get that. We'll put all those financials together for you and no charge. So use the SBDC as a resource with Phil.
Absolutely.
So, well, thanks everybody for joining. Thank you, Phil, for sharing.
Thanks.
Janet, thanks for driving the ship as always. And we will see you guys next Tuesday. Have a good week and enjoy your day.